Bitcoin faces further decline, warns Big Short investor Michael Burry. The investor famed for predicting the 2008 housing market crash, earning him the moniker, the Big Short, has issued a stark warning about Bitcoin's future. The cryptocurrency has already lost $1 trillion in value in recent months, with its price dropping nearly 50% from its peak. Burry believes the current downturn isn't the bottom, citing potential for a death spiral driven by forced liquidations and the asset's lack of tangible utility. The forces driving potential further decline. Burry's analysis centers on two primary risks. First, highly leveraged positions in Bitcoin are vulnerable to margin calls, which could trigger panic selling and accelerate the price drop. Recent data from CoinGlass shows $2.65 billion in futures positions liquidated in a single day, illustrating this volatility. Second, he argues that Bitcoin lacks meaningful real-world applications and functions primarily as a speculative asset. The situation is particularly dire for Bitcoin miners. Burry predicts that if the price falls to $50,000, most mining operations would become insolvent, potentially collapsing the market for tokenized metal futures due to insufficient demand. This illustrates how interconnected crypto markets are and how a single asset's failure can trigger a chain reaction. How investors should respond. Burry's advice is simple: pause, step back, and reassess. Research in behavioral economics shows that losses are psychologically more impactful than gains, leading to irrational decision-making under stress. Take a break. Avoid making hasty choices driven by panic. Evaluate risk tolerance. Honestly assess if you can withstand further corrections. If not, rebalance your portfolio with guidance from a financial advisor. Stick to long-term plans. If you believe in Bitcoin's long-term viability, short-term volatility shouldn't force an exit. Limit exposure. Financial advisors generally recommend allocating only a small percentage, 5–10% of your portfolio to Bitcoin, given its high risk. Prudent decisions are rarely made when you're experiencing anxiety, Burry suggests, advising investors to avoid impulsive reactions driven by fear. The bigger picture. Burry's warnings come at a critical time. The current market conditions highlight the inherent volatility of cryptocurrencies, particularly Bitcoin. While some remain optimistic about its long-term potential, the recent downturn serves as a harsh reminder of its speculative nature. Investors should approach with caution, recognizing that extreme price swings are a recurring feature of this asset class. The core message is clear: manage risk, avoid panic, and prioritize informed decision-making over emotional reactions.